Well, this time IBBI has brought in a lot of amendments. Indeed, I would say more progressive and substantial amendments which are in consonance with the pith and substance of the code, which is maximization of value of assets. I would categorize these amendments broadly into three heads. First, value maximization. Second, timelines and avoidance transactions. And third, the other amendments relating to conducting CIRP. IBBI has attempted to bring in an indicator or a guiding principle as to what amounts to an information memorandum. The newly inserted indicator prescribes information memorandum as a comprehensive document which highlights key selling aspects of corporate data, indeed which serves as a philosopher's stone for a successful resolution. The newly inserted indicator amplifies the existing contents of the information memorandum to facilitate prospective resolution applicant in submitting a competitive resolution plan. In addition to the description of the assets and liabilities of the corporate debtor, the amendment mandates to include the description of contingent liabilities, and the description of the assets shall also include geographical coordinates of fixed assets. This becomes an imperative factor for the prospective resolution applicants to assess the value of the fixed assets. Furthermore, the information memorandum to include an overview of the corporate debtor by capturing details of key contracts, key investments, and details of business performance. Also, it shall include the factors that determine the value of corporate debtor as going concern, such as input credits of GST, details of key customers, employees, brought forward losses in income tax returns, supply chain linkage, and other pre-existing facilities. Notwithstanding the contents of the IM, where the corporate debtor's book value of total assets exceed 100 crores as per the last available financial statement, few additional information pertaining to details of business evolution, industry overview, and key growth drivers shall be mandatorily provided in the information memorandum. Kindly take note of this clause. This has a consequential relevance with the foregoing amendments. An interesting method of value maximization is added to CIRP. Prior to amendment, non-receipt of resolution plan led to culmination of CIRP and left us with no other option but to liquidate the corporate debtor. Now the game changer in the resolution process is newly inserted sub-regulation, where if the resolution professional does not receive a resolution plan, he may issue a request for resolution plan for one or more assets with the prior approval of COC. To give effect to the same, the amendments provide for an additional measure of insolvency resolution of corporate debtor by sale of one or more assets to one or more successful resolution applicants submitting resolution plan for such assets and manner of dealing remaining assets. It is interesting to witness how these amendments would unfold. In addition to the amendments made to the contents of the information memorandum, where the corporate debtor assets value is more than 100 crores, the resolution professional is mandated to prepare a marketing strategy for the assets of the corporate debtor in consultation with the COC. Whenever the Committee of Creditors is deciding to liquidate a corporate debtor, the Committee of Creditors shall examine the options of compromise or arrangements as referred to in the liquidation regulations, and such recommendations shall be filed by the resolution professional along with the liquidation application with the adjudicating authority. Wherever such recommendations have been made by the Committee of Creditors, the resolution professional as well as the Committee of Creditor shall keep on exploring such a possibility of compromise or arrangement during the pendency of the liquidation application before the adjudicating authority. In light of the amendments made so far, the Form G, which is Invitation for Expression of Interest, has been amended to facilitate the bidders and investors to understand more about the corporate debtor. The amended Form G provides for a title which indicates the operation of industry type and locations of the corporate debtor. It also further gives a key information about the corporate debtor, such as details of places where majority of fixed assets are located, installed capacity of main products or services, quantity and value of main products or services sold in last financial year, number of employees or workmen, Further details including last available financial statement with schedules of 2 years, list of creditors, relevant dates for subsequent events of the processes are also to be provided in the Form G. To give effect to the amendments made pertaining to the value maximization, few timelines have been amended. Submission of IM is now to be made on or before 95th day from the insolvency commencement date, and publication of Form G is to be made on or before 60th day from the ICD. And also an interesting amendment was made pertaining to the filing of avoidance transactions. Now the timelines have been modified and the RP has to file an application pertaining to the avoidance transaction on or before 130th day from the ICD, whereas the copy of such applications has to be provided to the prospective resolution applicant so as the same can be included in the resolution plan. As regards to the other amendments pertaining to the conducting of CIRP are, first and foremost amendment is inserting a new regulation where a process email has to be opened by the IRP and it is imbibed with an element of perpetuality, where in the event of his replacement by a resolution professional, he shall hand over the credentials of the email to him. And all such communications shall be made only through this process email ID. Further, there was a new regulation which was brought in, communication to the creditors, where interim resolution professional shall send a communication along with a copy of public announcement made under Regulation 6 to all the creditors as available on the books of accounts of the corporate debtor through post or electronic means. Wherever such communication is not possible, the Regulation 6 public announcement shall be deemed to be communicated to such creditors. Further, an interesting explanation has been inserted to Regulation 18, which is meeting of committee, where for the purpose it has been clarified that the meetings may be convened till the resolution plan is approved under section 31 or order for liquidation is passed under section 33 and decide on matters which do not affect the resolution plan submitted before the adjudicating authority. It is pertinent to note that this explanation is clarificatory in nature and hence this is deemed to be the rule position with effect from the date of notification of the principal regulation, that is Regulation 18. Further, a new regulation has been inserted, which is 40D, decision for liquidation. Wherever the committee is considering a liquidation of a corporate debtor, it shall consider few factors and these factors are to be recorded and submitted along with the application of liquidation submitted to the adjudicating authority. And these factors include non-operational status of preceding 3 years, goods produced or services offered or technology employed being obsolete, absence of any assets, lack of any intangible assets, or factors which bring value as going concern over and above the physical assets like brand value, intellectual property, accumulated losses, depreciation, investments that are yet to mature, etc. These amendments remind me of Lord Mansfield, where he says, "Law follows the practice of the merchant," and it gives me an immense pleasure to witness such a codification of practices of the existing insolvency professionals.